With so many big cap companies reporting this week, including about 25% of the S&P 500, I wanted to take a look at some of the big cap earnings superstars. Now, all these companies are just one quarter away from having perfect track records, so they only have one miss in the last 5 years. That's still really impressive, but their charts are soaring here. So what companies are putting it all together, beating and seeing the hot stock? Let's dive right in and see. So we're starting off with Mastercard, ticker MA. And as you can see, they just have that one miss during the pandemic just 2 quarters ago. Oh, what a disappointment, Mastercard, because prior to that miss, they hadn't missed since 2014. So quite an impressive track record, even with the one miss. I'm just giving them some stuff because it is disappointing to see the miss, the little red arrow on the chart. But nobody cared, and the shares still making new highs. And you can see they're up about 8% year to date to this new breakout. So they're not, killing it. That's a little bit under the S&P 500, but still getting the new breakout heading into the number. Now, these shares are not cheap, which is one of my main issues with Mastercard. I love the performance. I love what they're doing with the company, but they're trading at 48 times. So it's a little too stretched for my value investor blood. But I know for those of you who are growth investors, you just love Mastercard, and this chart says why. Now let's switch over to the industrial side. We rarely cover it because the shares on the industrial side haven't been doing that much until 2020. And one of those is parker-hannifin, ticker PH. So they're in motion and control technologies. Most people probably never heard of them. They've been around a long time. And they too have put together this 5-year earnings track record. But wait, this one doesn't even have any red arrows. I was wrong. This one is a perfect track record. So parker-hannifin, it's just been amazing. And finally, the shares in 2020 breaking out of that multi-year channel. Now, you had to be very dedicated and patient if you were a long-term shareholder, just kind of sitting around, waiting for 2020. But finally, you got it as the industrials are back in play and back in favor. And look at 2021. Again, everybody piling in to the industrials on the economic reopening. These shares are up 16.8%. So it's one of the few stocks I've covered on the All-Stars videos where they're really taking off in 2021 in a big way and beating the S&P 500. Now, can they continue to beat here and outperform? I don't know. They're trading at 22 times, but for everybody interested in the global reopen trade, these industrials are names to watch. Then we're going to switch it over to big pharma. Yeah, there's still some big pharma putting together good track records. AbbVie, ticker ABBV. Now, I own this one in my own personal portfolio, but I've only just dove in. And Berkshire Hathaway actually bought in the fourth quarter. I'm not sure where they bought, or if they bought down here at these lows. That would have been a nice purchase because these shares are only trading at 8 times with this great earnings meet or beat track record. They only had that one miss there in 2019. So you got to like that. Plus, they pay the big dividend, nearly 5%, which they claim is safe. Now, they own Botox now, and they have a couple other drugs that are on the move that should help them replace Humira, which goes off patent in 2023. That's been the main concern with the stock and why it's not yet back to those 2018 highs, despite buying the Botox. So this is one to watch. But again, it is dirt cheap, trading at just 8.9 times forward earnings. So what else can go wrong? I don't know, but this is one to watch on the drug side. Then we're going to switch back over to the industrials. Yes, again, another industrial you may or may not ever heard of or don't pay any attention to. Illinois Tool Works, ticker ITW. So they were founded in 1912. Yeah, they've been around a while, over 100 years old. They have 7 different segments. So this is one of those companies going way back in time where they just kept buying out other types of companies. So now they have a lot of diverse businesses, including automotive. They make food equipment like at restaurants and big food type of things. They have construction products. They have polymers and fluids. They do welding. Automotive is their biggest category now at only 20% of the business, but it's pretty diverse across all their business lines. And again, on the global reopening, anything with industrials is considered hot, hot, hot. They have the earnings surprise track record to match it. And so these shares too have busted out here in 2021, just like parker-hannifin, up 12.1% year to date. So just a little bit over the S&P 500, but you got to like the technicals on this breakout here going into this earnings report. Now, ITW is no longer cheap. It used to be back in the day, a couple of years ago, when no one was paying it much attention there in 2018 and 2019, but now it's trading at 28 times. Can the earnings catch up to what the chart is saying? We will find out. Then we're going to finish it up with a tech play, Skyworks Solutions on the semi side. Now, they used to be known basically for all the business they did with Apple, but they've been diversifying their customer base, so it's a little less risky here. It's not just Apple, Apple, Apple anymore. And they've put together this great earnings surprise track record as well, with just that one miss in 2019. They are coming off that big beat to start 2021, which pushed these shares higher. And these shares are one of the few on the techie kind of growth names that are up significantly here in 2021 and hitting or just about to hit those new 5-year highs. Shares are up about 25% year to date, so that's pretty hot, almost double the S&P 500. And shares not too expensive here as that E on the earnings continues to rise for the semiconductors. The forward PE is just about 19 times here for Skyworks, so not too bad compared to the overall market. And we will see if they can put forth another big earnings surprise and push these shares even higher. So the thing about this rally here in 2021 as the major indexes continue to hit new highs is that it's not really being driven by just one area. It's not just tech or even the big growth names. It's a lot of the old economy and the industrials and the transports and a whole host of other things, including retail, that continue to drive everything higher. And that is healthy. That's what this bull needs to take it to the next level. So I'm not bearish here. I'm still continuing to believe we're going to see further highs on a lot of these companies into the global reopening. So you don't want to miss a single episode of the Earnings All-Stars videos, because I'm going to be bringing you all the charts and what's going on during earnings season all throughout this month and next month into May. So be sure to subscribe at zacks.com/YouTube and get all of our Earnings All-Stars videos and all of our other videos, including top stock picks of the week. You don't want to miss that one. You can get it all there, and I'll see you again next time with some more earnings charts.